What's going on, guys? Week off there, so I'm happy to be back. This is Buy High and Sell Low. I am Teddy. I got my eye kind of busted up. I'm not sure if you guys can even see that. I had a jiu-jitsu tournament, took an elbow right to the eyeball, started bleeding. So if I look a little funky, if I got a dark eye here, you guys know what's up. But today we have a shitload to talk about. I don't want to waste any time here. I don't want to get on with the pleasantries. We're going to skip all that. We're going to get into SPY. But I want to say, first off, thank you all for being here. And one thing I hate in this world are people who cannot admit when they were wrong. And I was wrong. 100% I was wrong. So I want to own up to that and just kind of, make sure that I make it a point to tell you guys I was wrong. I made a mistake. It happens. Good traders make mistakes. I didn't think that Trump was going to go through with tariffs once he saw what they were doing to the market. I thought he would see the negative impact they were having. I mean, we moved from about this 612, 613 area all the way down to 550. I thought he was going to back off, kind of chill out with the tariff talk and see where things went from there. So I thought 550 was going to be kind of our bottoming area. I was wrong. It's as simple as that. I was wrong. Trump went full on with the tariffs, and we immediately crashed heavily. And like I said, I hate people who cannot admit they're wrong, so I'm not going to be that. I was wrong, and that's something that just happens. Successful traders are wrong, and you have to get comfortable and be prepared to be wrong. So I was prepared to be wrong with my cash holdings in my long-term account. I knew that, trying to time a bottom is not usually the right way to do things when it comes to investments and swings. So I was prepared to be wrong, but I also, I did deploy a little bit of cash at 550. I have since kind of slowed the cash deployment, and I'm planning a little bit longer runway for that cash, which we'll talk about later. That's going to be one of the things that we discuss tonight, is how I'm deploying my cash on this market. If you want to call it a crash the last few days, since last Thursday, you can call that kind of a crash. I mean, let's look at this. It was at 560, and then it was at, within 3 days, 480. You can call that a crash if you'd like. I'd say it's more of a violent sell-off. It's definitely a pretty negative market, but we're going to be talking about it. I'll be giving you guys my analysis. I'll be giving you guys an overview of one of the most important levels I have seen ever in my trading career. And I'm not just talking out of my ass. I'm not just saying that because I want to get clicks and I want to get people to join. I think that we are seeing interaction with one of the most important weekly levels on the SPY chart that I've ever seen. And I've been trading since, 2018. So I've not been trading for, 3 decades or anything like that. But in my 7-ish, 8-ish, however long years it's been, this is one of the most important levels. So we're going to get into that. We also got the giveaway, guys. I'm excited. We're going to be doing the giveaway. It's going to be kind of in the middle, towards the end of the episode. So stick around to see if you guys won the free month in my trading community, because I'm excited. I got 3 people picked out. The way I picked it out was I went on one of those random generators, and everyone who commented, liked, and was subscribed, I put your guys' usernames in the random generator, and then it kicked out 3 names. And so I got 3 very, very special people who are going to be trading with me for an entire month. You guys are going to get a free month trading with me. So stick around to see if you guys are one of the winners. I do want to talk about one other thing before we kind of get into the meat and potatoes of this live stream, and that's going to be a day trade that I took today. So on SPY, that's what I trade every single morning. I took a short on SPY, and I want to walk you guys through what caused me to take that short, because it moved pretty heavily after I took that short. And not all of this was because the technical setup or anything like that, but it did move $30 almost. A lot of that was the news, but we still have to analyze those technical setups after they happen and after they're so successful. So this was the tweet I sent out. I'm not sure if you guys know this, but I have a little subscriber thing. It's like $10 a month. And when people subscribe, they get like a day trade every morning. I post one. Usually it's my last day trade of the morning, and I put morning trade idea. SPY is starting to lean short after it rejected the same level 3 times. If we can break and hold below the 9 EMA, the yellow line, I will short this. And I tweeted that right up here. Let's put a little circle up there. I tweeted that right up here. And I just want to walk you guys through what that setup actually was, and then how I played it, because it did work out and it was a pretty effective setup. The first thing I noticed in this setup was the topping in this area, this 525 area. We saw a first green candle. Let's zoom in on this a little bit more. With the range on the day, it's hard to look at these candles because they're so, far apart. But the first rejection that we had, the early morning move was pretty bullish. This is the open. You guys can see little dip, and then we started to rally. And then we continued to rally, but then we closed this 5-minute candle with a long upper wick. That was my first indication. In my head, when I see a long upper wick, what I'm thinking is, okay, the bulls attempted a breakout, and they just didn't quite have the success they thought they were going to have. And then our next candle, same thing. We pop up to that area again, and then we drop lower, and this one was a full rejection. The last one, the third candle, was kind of my nail in the coffin where I thought, okay, this is a completely bearish setup, and that was we got up to highs again, and then at the last 30, 45 seconds of the candle, this thing closed it with a tiny green body and a long upper wick, the longest upper wick that we had in all three of those candles. And that's when I decided, okay, I'm going to check the 1 minute on this. I think we have a triple top here. Let me get this. Oh, man, this thing is acting crazy. There we go. You can see the triple top very clearly right here. I'll get a little line here. Our first top, rejection. Our second top, rejection. Our third top, rejection. And what happened on our third top? It was a violent, very aggressive rejection. Just from a price action perspective, that tells me that bears are active here and they're ready to push the price down. And so if I go back to my 5-minute chart, that's where it was kind of like, okay, I'm prepared for this to be, a short opportunity. And I think I do want to take entry on this. Here we are. So what did I do next? I thought about, okay, where would be the most effective place to enter this? And when I was doing that, I had the 9 EMA up. Let me get that pulled up. Here's the 9 EMA. Let's make it the color that I like. Beautiful. So there's the 9 EMA. While this was happening, we were still above the 9 EMA. And if you guys have watched any of my 9 EMA videos, or if you've been to any of my camps where I talk about the 9 EMA, I am always looking long when price is above the 9 EMA, and I'm always looking short when price is below the 9 EMA. It's one of my kind of biggest things. And so when we were above the 9 EMA, I was not really prepared to take this short yet. Once we broke it, that was my trigger that, okay, bears have created number one, this triple top. Number two, they've broke the 9 EMA, which is a very key level for me. And now I'm looking for entry. So when they retested this 9 EMA on this next red candle, you can see that upper wick there. It bounced, green body, tested the 9 EMA, boom. That is my entry trigger. Because we have multiple bearish setups at once. Triple top here, broke the 9, retested it immediately after. You can see it closed red, and then it sold off. That was my play. And if anyone had the balls to hold runners, I mean, you got rich on that single one play. You probably would have gotten entry at about 521.50s, 522-ish. And if you were able to hold your runners, this thing ran all the way down to 489. 489. It's pretty insane. All right, I just wanted to walk you guys through that. I just wanted to give you guys an idea of kind of what I look for on a daily basis. That's a pretty typical trade that I'll take. And it was a good one. I was pretty proud of how it worked out. So I just wanted to, walk you guys through that. I want to take a moment to pause here and just say welcome, everybody. I see more people filing in every single minute. I see more people commenting. I just want to say I appreciate you all for being here. And do not forget to drop your like while you're here. We're going for 200 likes on this stream. So we've gotten I think 180 or 170 a couple times. We're going for 200 likes here. Hopefully we get that 1,000 views again. 1,000 views, 200 likes, another stream next week. That's kind of the name of the game. I see some familiar names in the chat. I see Dan Bob Dan. I see BF Hammer, Ambular. Shout out Ambular for being in the Discord. WF, Paul, shout out. Luna. I see Angelo. Hell yeah. Thank you guys for being here tonight. It's a cool thing. And we're going to move into a little bit more of a trader psychology talk. So we're not going to be doing as much charting for now for the next probably 25, 30 minutes. I'll talk about this, and then we'll get back into the charts. We'll get back into the SPY Daily, Weekly, and all of my analysis about those different charts. I want to talk about bear markets. Last time we talked, it was, where was price last time we talked? I believe it was this Wednesday. Yeah, so price was all the way up at about 570 last time we talked. Price is now touched 480. That's almost $100 since we last talked, and it was already down $40 from highs. Price touched down 20% from highs. That's the quote-unquote indicator of a bear market. I have my own thoughts and opinions on that. I don't think that quite indicates a bear market, but that's kind of the status quo is negative 20% is a bear market. So we need to know how a bear market impacts us as traders. There's going to be a lot of things tugging on you during a bear market. And we've had one in 2022. We had a crash in 2020. We had a 2018 little, whatever you want to call it, something in between. So in the last 7-8 years, there's been quite a bit that's happened with the market. I've gone through quite a bit of those. I was trading full time in 2022. I knew it was a bear market. I didn't really know how to handle it back then. Now I'm kind of grown up, matured as a trader. I understand a little bit more what a bear market is going to do to me as a trader. And so I want to share that with you guys. And I kind of came up with a nice little visual. We talked about, be a fish that knows how to avoid the hooks. We talked about becoming a fisherman. We talked about not biting the worm that clearly has a hook in it. And I kind of like those visuals. It helped me understand it, and I think it helped you guys. So I came up with one to kind of explain how a bear market is going to impact you emotionally and mentally here. So I want you guys to imagine that you're at the zoo. You're just walking along, nice warm day, and you come across the tiger exhibit. It's over here on your right. You're just checking out these tigers. There's a fence around them. You can clearly see that there's this, I don't know if it's a chain link fence, whatever it is, but there's a fence there, and then even closer to you, there is a glass wall between you. So the tiger's got a fence and a glass wall there. And you're just kind of going about your day. You're just kind of chilling, watching them. And then all of a sudden, out of nowhere, this tiger sprints up and jumps onto the fence. Just full speed, acts like it's about to attack you. You know how they do with they're roaring and they're jumping and they're slamming and they're slashing. And it just completely whams against this fence. Full speed, full jump. The fence is obviously going to stop it, but you're also going to jump back. Emotionally, you're going to get scared, and you're going to either just take a step back, or you're going to prepare to turn your ass and run. That's what's going to happen in your brain. And if you've ever been in that situation, you know that's exactly what happens. Even if it's like the gorilla exhibit or something, and they just start running towards the glass, I always kind of feel that oh shit, oh. And get ready to if that thing breaks or whatever, I gotta move. It's not gonna break. They don't break very often. Your brain knows that, but you still are programmed to be scared. You're still programmed to have that little bit of survival in you that says, that tiger is running at me. I need to turn my ass and run. You're programmed to do that. And the same thing happens when the market is selling off in a panic situation like it's been doing. You know that there's a glass wall there. You know that there's a fence there. And that fence and glass wall is the fact that the market has never failed to recover from a bear market. We can pull up this SPY monthly. If we want to look at this, you want to look at this? Here we go. Bear market, recovery, bear market, recovery, bear market, recovery. Crash, recovery, bear market, recovery. The market has never failed to recover from a bear market. That is our glass wall there. We know it's there. We know the most likely outcome. We know all of these things. But you still get scared and you still have kind of that knee-jerk reaction due to fear. And that's okay, guys. That's okay. The other aspect of this is we are wired to care about losses more than we're wired to care about wins. It's been proven through multiple different studies. It's been something that's been exhibited many times over and over. People care more about losing things than they do gaining things. So punishment is typically more impactful than reinforcement. And you'll notice that if you have, kids or something, you know that taking their phone away is way, way worse for them than if you just like give them a sticker. You know, they're gonna care more about the punishment than they are the reinforcement. And that's just been exhibited over years and over different studies. And so that kind of adds to the fact that you care more about this quick, violent turn down than you would a quick, violent uptrend. During this uptrend here, when we recovered from 2022 in the 2022 bear market, it was a very fast, very quick move to the upside. But you weren't really emotional about it. You know, from this 420 on SPY all the way to 600, you weren't really emotional about it. It wasn't really stirring things in here. But now that we've moved from 600 to 500, that's emotionally stirring things. And so what do we have to do, guys? What do we have to do to make sure that we're not being the person who turns butt and runs away from the tiger exhibit when there's two walls there? We have to make sure that we give ourselves time to settle. We have to make sure that we give ourselves time to just understand that the market has never not recovered from a bear market. Your logic will prevail in the end. Your slow brain, which is different than your emotional brain, and I have another analogy for this. I have another analogy, which I actually think I read this in a book somewhere, because I did not come up with this one, but it was in my brain somehow. But your slow brain will eventually figure out we need to be logical, rational, come up with a plan. It's just going to take longer. When this market is crashing, in the moment, you're going to have that knee-jerk, I need to run away, I need to protect myself feeling. Give it time, give it space, your rational brain will prevail, and you will likely make a better decision. That knee-jerk reaction I'm talking about is typically something like, I need to make these losses stop right now. You could be seeing your IRA get crushed. You could be seeing your retirement get crushed. You could be seeing a lot of things get crushed. And your brain is going to be saying, I need to figure out a way to make these losses stop. Like, how can I get these to stop? That's the emotional reaction that I'm talking about. And that's just how our brains are programmed, guys. We don't really get to control that. That comes from years of, running from predators in the woods and waking up in our cave to something scary at the entrance of the cave. And, oh, goddamn, I got to figure this out. Even though they were probably more like noises like, oh shit, scared. Fucking, they were just making caveman noises. But that's the same thing. We feel like there's a predator after us when we're losing money. It's the same type of feeling. Obviously, it's not the exact same. One of them is probably way scarier. I mean, I've never been chased by something like that. One of them is probably way scarier, but it's the same type of emotional reaction. Let's get into the little other analogy I have here. So when I was talking about the fast brain and the slower brain, the emotional brain, the rational brain, I want you guys to think of an elephant and someone riding the elephant. So the rider is going to be our rational, logical brain, and the elephant is going to be our emotional brain. A lot of the times, the rider is going to think, I got this under control, dude. I just whip this thing in the butt and kind of, lean one way or the other, and the elephant listens to me. That's a typical during a bull market. I can control the elephant. Like I said, when SPY was rallying from this 411, 416, 400, all the way up to the 600, I was controlling the elephant. I was telling it which way to go, what path to take, and things were good. I felt like I was completely in control. In scary times, gunshots go off, a tiger's behind us. Is that rider going to be able to control the damn elephant? Absolutely not. No fucking shot that a rider can control the elephant. The elephant is like 1,000 times heavier, stronger, bigger than the rider. That's us. That is us during a bear market. We are the rider trying, our logical brain is trying to, oh shit, okay, I got to get this thing. I got to make sure that we don't run off this cliff here. We got to make sure we do this. The elephant is just going to, go. So what do you have to do? You have to give the elephant time to calm down. I don't know if any of you guys have ever rode a horse when it's running. It's only happened to me one time in my life. I was riding a horse and it was actually scared running. You just have to ride it out for a little bit. And that's exactly what our logical, rational brain has to do. The elephant is gonna go nuts. The elephant is gonna go wild. You have to just kind of grab on, hold on tight until the elephant starts to calm down, and then you can start to steer again. You can start to, let's go this direction. You can start to, I've got a plan. I'm going to make sure that we don't run off a damn cliff. Let's go right. Let's go left. Take the path on the left. Go straight or turn the hell around. We got to go figure out what the heck happened back there. Whatever it is, that's what you need to get to. You need to get to just a little bit calmer of a time, a little bit calmer of an elephant. Because the elephant going wild, you aren't going to be able to do shit. So guys, I guess in the end here, what I'm trying to say is do not get panicked and allow your panic to make decisions. It's okay, you're going to have that elephant sprint out. You're going to have that elephant go wild sometimes. Just don't make decisions based on the elephant. Don't jump off. Don't jump off the elephant. You might lose the damn elephant. You don't want to lose your elephant. You have a cool-ass animal that you're riding through. Wherever you're at, a jungle maybe, a desert maybe. I don't know where you ride elephants. You have a cool-ass pet animal. Just because it got scared, don't jump off and abandon it. Ride it out and then figure out how to gain back control once the elephant starts to chill out a little bit. Once your emotions start to calm down, figure out the plan. Figure out what you're going to do. Be logical about it. And I just want to say all this because I see a lot of emotions on social media. I see a lot of people letting their elephant make decisions. People jumping off the elephant. I see a lot of that. You don't need to be doing that during a bear market. The only situation where you might need to panic is if you are an older individual. If you're anything under 45, 50, why would you be panicking? You have the glass wall. You have the chain link fence of the market has never failed to recover from a bear market. We've continued to make highs, guys. Even if a bear market happens and it takes 2 years to recover, if you're 40, by the time you're 42, we'll be at new highs again. And you'll be wishing you bought more when we were lower. So do not freak out and do not let that elephant make you jump off. I could see maybe another situation. Maybe if you're the type of person who thinks an apocalypse is coming. I'm not that person though. We don't need to get into that. I was about to go down a rabbit hole there. We're about to talk about aliens and zombies and shit. But if you feel like there's going to be a world-ending event or a world fracturing event, maybe you're in a different situation. But for most people who don't think something like that is going to happen, which I think is the rational opinion, then you buy the dips, you buy the bear markets, you survive these bear markets, and I'll be talking to you guys about how you do that next. That's a good little transition by me there. Grab a drink here and then we'll actually start to talk about it. So this is actually titled How to Not Be a Fucking Idiot During the Bear Market. It's a little bit brash, but that's what I titled it. So we're going to be talking about how to not be a fucking idiot during a bear market. And I see some more names in here. I see Osvaldo. I see Melting Pot. I see Chats in there. I see JY. Thank you guys for being here. I see a question here. Do you see any scenario where this really does gap significantly down, though? We are getting close to the big question mark if this shit goes lower. Yes. I do have a very, very key level. We will be talking about it, and I'll be talking to you guys about what could happen if we go below that, which, a little bit of a spoiler here, we will still probably come back to highs within a couple years. Even if we go much, much lower, we will still likely come back towards highs. The only, chance we don't is if we have a crazy recession. Or if we have some, like I said, some crazy, outlandish situation where there's some world event. But if we go lower, guys, just remember, we are still likely to return to highs within a couple years. Even if there's a recession and you're young, we are still likely to return to highs within half a decade. So guys, regardless, if we're still likely to move to highs, you know what the plan has to be. But I'm going to get into it more. What's up, Weston? JB. What's up, JB? JB's from the Discord. Shout out, JB. And let's get into how to not be a fucking idiot during a bear market. I kind of have a little bit of a bullets in my brain about this. The first one is, do not deploy all your cash at once. I'm going to repeat that, guys. I'm going to stare into the camera for this one. Do not deploy all of your cash at once. You're not going to time the bottom. During a bear market, being a fucking idiot 1.0 is trying to time the bottom. Almost nobody times the bottom. Almost nobody. 0.0000001% of traders time the bottom. You're not going to be that guy. I'm not going to be that guy. No one in here is likely to be that guy. So what we're going to do is we're going to deploy our cash slowly. We're going to be smart about it. We're going to make sure that we're buying as price moves down, but we're still leaving cash to deploy if our levels don't hold. If the bear market extends, we need to make sure that we have enough cash to continue buying. And there's a few ways that we can do that. The first one, which I actually just started today, is using a hedge. So in a bear market, if this thing extends further than maybe you think it's going to, or further than you have a cash runway for, because if we scale in through a bear market and it goes down, 40, 50%, most people are not going to have cash runways for that. The first way that we can extend our cash runway is with a hedge. And how that works is we'll be buying a put or puts or whatever. And then once price moves through your cash runway, you can sell those puts and have extra cash to average down with. And then you can load up again on another hedge. And you can load up again. If it continues to go, you're just going to keep reloading on these hedges. And today, I ended up taking SPY 480 puts. When SPY was green this morning, I got into some 480 puts about a month. I think it was like a month and a week. So like 5 weeks out, I got into those puts. They're already up a shitload of money. I got insanely lucky with my entry today. But that's just kind of an example for you guys. Enter a hedge, have puts while you are investing your cash, and then when you run out of cash, you can have more cash due to the hedge, and then you can go and cycle this. add another hedge. If it continues to go down, you will get more cash to add to your investments. If it goes up, your investments are going to be making money. That's how my hedge works. That's the simple way of looking at it. A few percent of your long-term account should be a hedge. We're not throwing 10% of our account into this hedge. A few percent of your long-term account should be a hedge or could be a hedge. You don't have to do this. This is just how I'm playing it. So like I said, guys, a hedge, if it pays, so if price continues to go down, you will get money to dollar cost average. If your hedge loses, your investments will be making money. The other thing about possibly finding cash is when the market gets low, when the market, like I said, goes down 30, 40%, that's when it's time to tighten the fuck up in your normal life, guys, and find that extra little cash. I don't care what it's from. I don't care what it is. Maybe you're not going to go to the movies every week. Maybe you're going to stop going to Friday dinner. Maybe you're going to do this. Maybe you're going to do that. Maybe you're going to cancel Netflix for the next few months. Maybe you're going to do this. Any of that. Maybe all of that. Tighten the fuck up and find that extra cash. You know why, guys? Because when the market is down 25, 30, 40%, that's when you gotta be buying. That's when you need every single cent that you can afford to go into the market. You know why? Because there's never been a bear market that has not recovered. There's never been a bear market that has not recovered. You have the glass wall. You have the chain link fence there, guys. So tighten up, find money. The way I'm going to do it is I'm going to allocate a larger percentage of my day trading gains. So typically, most of my day trading gains were going towards, being a hooligan, doing whatever I'm doing, buying whatever I'm buying, weekend activities, casino shit, you know what I'm talking about? So if SPY continues to break lower, and if it wants to break the very, very key level that we're going to talk about here in about 10, 15 minutes, I'll be cutting all that. And more of that money will be going into my long-term account. I'll still have to pay for life and everything. I'll still have to pay for living. I'll still have to pay for groceries and stuff. So I'll have to get that from the day trading. But the rest of it, there's not going to be room for me to go to the casino and play blackjack. There's not going to be room for me to do all these things. There's not going to be room for me to go on a trip. It's going to need to go into the long term. When things turn around, we can go back to the old way. I can go back to the casino, trips, blah, blah, blah. But until then, I'm going to need that money to dollar cost average in. I'm going to need that money to add every single cent I possibly can to my Amazon holdings, my Google holdings, my Nvidia holdings, my SoFi holdings. Because when those things are down as significantly as they would be if we break this key level, I am going to want to be adding. Because that's going to be a heavy, heavy discount. Some other things during a bear market, guys. Strong companies with a proven track record. %90 of my holdings are good companies with a proven track record. Less than 10% are riskier investments. One of my riskier investments is SoFi. It's one I really believe in as a company. The rest of my investments, strong companies, they've been growing like crazy. They're money cash cows. Nvidia, Amazon, Google, Tesla. Companies that are proven. Sorry, I still got some cough from being sick last week. But don't be buying companies that are kind of on the fringe during this time. Because if things do get really bad, those are the companies that are going to go. Those are the companies that are, in my opinion, not going to make it. Just off the top of my head, something like a Peloton. Something like a Carvana. Maybe even something like a Roblox. They're just not strong companies, proven growth, proven track record, in my eyes. So buy strong companies. I'm buying things like Pepsi. Things that are not going to go away. Things that make a shitload of money. And so that's just a simple tip, which, that one kind of sounds stupid. I'm like, hey guys, buy good companies. You know what I mean? Like, oh, don't buy bad companies, dude. But it's just a little bit more important during these bear market situations where we're going to have the potential for things to really go underwater if we continue in the way that we've been going. I just want to take a pause here. Thank you all for being here again. I see a couple more names. I see Neil Mack. Hell yeah, shout out. I see Josh. I see JY. Thank you guys for being here. And to everyone who's lurking, not posting in the chat, I just want to give you guys a shout out as well. Thank you for being here. Yeah, let's keep going. The other last thing I want to talk about during a bear market and how to not be a fucking idiot during a bear market is the news sucks. Guys, the news sucks. 95% of people on news stations, they know nothing about the market. They don't trade their own money. They pay somebody. They call that person, hey, what the hell is happening with the market? That person tells them oh, you don't need to worry. We're have it all handled. They go, oh, thanks, buddy. Hang up. Boom. End of story. So the news is bullshit. Most of you guys probably already know this by now. A lot of them are funded by Wall Street. A lot of them have front men from Wall Street. Those talking heads are not trying to help you. They are trying to manipulate you. So don't listen to them. Don't listen to them, guys. Those Wall Street talking heads, do not listen to them. I don't care who it is. I don't care what they're saying. I don't care if it stimulates that emotion in your chest of, oh shit, dude, they're making me scared. Like they're saying all the right things that are getting me all worked up. Don't listen to them. Don't let them impact you. You're the rider on the elephant. They're trying to freak the elephant out. They're shooting a cap gun off behind the elephant. They're making tiger noises. They're running through the jungle behind you going, "Arr, arr, arr," like a tiger, trying to scare your damn elephant. Do not let your elephant run off a cliff. Ride that shit out. Don't get scared of the cap gun. Don't get scared of the talking heads. Use your own brain and logical thinking. All right. That's what I have to tell you guys about how to not be a fucking idiot during a bear market. Maybe I'll use better language next week. Maybe I'll be a little bit more professional next week. But we're going to do some market analysis now. And this is a very, very important section of this stream. This is probably so important that I should bookmark this later. I don't usually do timestamps, or I'll clip this. Maybe I'll clip it and post it as its own individual clip because the current market is insane. The current market is crazy. There are so many things happening. There's so many technical levels to watch. This is going to be an important thing for people to see, an important thing for people to formulate their own opinion on. So guys, when I'm giving you my thoughts, my opinion, you need to be using your own brain, not just listening to me. I'm not some know-all genius who's going to have all the answers. I'm just giving you what I think based on my experience. So use this information, but also make sure that you're using your own experience and everything that you know as a trader to either say, I agree with Teddy or I don't agree with Teddy. Either are fine. You're not going to offend me. Let's get into it. We're going to start on this weekly chart here. And the first thing, guys, we have a hell of a lower trend line here. We have a hell of a lower trend line. I'm going to use a zone just because I prefer zones. Here we are. So in 2020, COVID crash, you guys can see all the way down here on the left here. COVID crash, March of 2020. We bounced off of about $220, something like that. Sorry, this cough is like kicking my ass right now. 2020, March, we bounced off of that 220 level, and then we bounced all the way to 480-ish. Bear market of 2022, which we've already talked about today. We declined all the way down to $350, which those were our first two taps of the trend line. After that, we created a higher low, which also tapped this trend line. And then we created another higher low, which also tapped this trend line. Now comes present day. We had that distribution I was talking about on Twitter, if you guys follow me on there. That distribution up here, we dropped. Trump tariffs sent us lower. And we tested this trend line, which it's already been a very established trend line. You know me, I need 3 taps for it to be an established trend line. 1, 2, 3, 4 already. So it's a clear trend line, and we're testing it right now. The importance of this trend line cannot be understated. Wait, maybe I fucked that up. I don't know. It's very important is what I'm trying to say. This lower trend line, very important. It has held since 2020, and it's had 4 different taps. If something like this breaks, we're going to need an extended move to the downside to fully refresh the trend line break. In my opinion, just this setup alone, a break of a trend line like this likely sends us to 400. Just with what I've seen in my experience, when you have 4 taps on a trend line and a trend line that spans 5 years, you're typically going to see at least a 10-15% move to the downside at the minimum, which 15% from about 480 puts us in the low to mid 400s. I would probably think that's kind of our minimum move on a trend line like this. The next thing we have here, let's get another zone going here, is this 2022 all-time highs. So in 2022, we rejected off of about 575-ish, or 475-ish, my bad. And then a couple months later, we rejected this 460 area. A few months later, we rejected 460 again. And then in July of 2023, so a whole over a year later, we rejected 460 again. So 460 to 475 was a very key level from 2021, end of 2021 that is, all the way to kind of mid to end of 2023. And you can see even in January of 2024, we did kind of test this level and it was a little bit of a resistance, but then we broke through. So for me, that's our second level in this area. And you can see where that sits in relation to current price. 470 to about 460 is within $15, $20 of current price. On Monday, we were sitting about 482 at lows. Let me make sure that's exactly right. I don't want to be talking out of my ass. Yeah, 481.80 was our low on Monday. This zone starts about 478, 479. That's going to be a very key level too, guys. I'm not sure if you guys have seen bullish structure when it comes to an uptrend, but typically we like to see previous highs that we've spent this long above held when we test them. So when we come down to test these previous highs, we want to see them get held. That shows that bulls are continuously turning resistance into support. So it gets above a resistance, comes down, tests it, and we move higher. Add that in with this trend line here, and we have a very key area between about this, I would say 485 all the way down to 460. And I have one last level here. Let me get it put in. Just going to make this whole thing a hell of a lot scarier. I know. This is our weekly 200 MA. Our weekly 200 MA is beyond significant, guys. I cannot tell you enough how significant this weekly 200 MA is. You can see it bounced off of that right in 2022. That was the bottom of the bear market in 2020. The crash didn't last long below the 200 MA. 2018, the bottom was the 200 MA. 2016, the bottom was the 200 MA. And this is where it gets scary. This is where we start to get a little freaked out. The last time we broke below and held below the 200 MA on the weekly chart was 2008. It was 2008. The 200 MA was sitting about 130. We broke below, and then price moved all the way to $67. So that's where we start to get really nervous if this 200 MA breaks. And that's just the 200 MA by itself. That's not even the other two massive key levels we have in this area. So what I'm saying, guys, is this 460 up to about 480-ish, 485, is one of the biggest key levels that will happen on SPY for at least the next decade. It is the most key level I've seen in my entire trading career. If we break this, I don't see us getting out of here before 400. That's kind of the minimum that I would see. That's the minimum downside that I would see. If we get through 460 and we confirm below 460, I just don't see us getting out of there without another 10-15% to the downside. With that said, my investment strategy for this is to deploy my cash down to about that 450, 455 area. And then I would put in those other measures I talked about where day trading gains would get more pushed over into long-term account. Those couple things. I'd be cutting costs in my life outside of trading and stuff, and be allocating that money towards the long-term account. I'd be doing all those things so I could dollar cost in more under 450. But we do have just such a key level here, guys. It's like standing on a cliff. I always tell people, when you're on a cliff like this, there's only one of two things that are going to happen. Number one is we're going to bounce and we're going to see a nice move to the upside. You avoid the cliff, or you're going to step off the damn cliff. And you need to be prepared for both. Like I said earlier, guys, this is a pretty 50-50 situation. This is a situation where you can predict one way, and you've got, I don't know if it's a 50-50, it's probably 60-40. You have a chance to be right, and you have a chance to be wrong. I don't think predicting one way or the other is the right decision in this situation. I think being prepared for either is the correct decision. So for me, the hedge that I took today, if we go lower, if we break 455, is when I will sell that hedge. I will allocate most of that cash towards those dollar cost averaging, and then I will buy another hedge. And if we continue lower, so if I buy my next hedge, say we're at like 455, when I sell it, I buy it at 460, I would sell it at like 410, 420, and buy another one. And that's what I'm going to continue cycling through. I'm going to use most of the hedge cash to dollar cost average into my long terms, and then a small portion of the hedge cash will go towards my next hedge. I hope that makes sense, guys. It's like a cliff. I don't know how else to describe it. We are standing on a cliff. We bounce around 485 down to 460, and we're seeing 600. It's just as simple as it can be. If we hold this level, we're headed back towards highs. I don't know if it takes a few months. I don't know if it takes a full year. I don't know if it only takes a month and a half. Maybe this shit just V-shape recover. Maybe that's the Trump special, is the V-shape after what we saw in 2020. But what I do know is if we lose this level, that would be very, very negative for the market. So, just to summarize, before we get into the giveaway, which the giveaway is going to be up next, guys. I'm about to give you the 3 names of the people who won a full month of trading with me, but I do want to summarize this. I want to be very clear. $460 up to $485 is the line in the sand based on my SPY weekly analysis. We have this lower trend line. We have the 200 MA, and we have this 2022 all-time high resistance. If we break below that, I think we would need to refresh at least 10 to 15% lower, which that puts us on track for the low 400s or 400 itself. If we hold that, it's heading back towards 600. It's heading back to 600. I just want to make it clear how key this level is, though. I don't see many key levels like this. I haven't seen a key level like this in a very, very long time on SPY. So keep this on your chart. If you have any questions about this key level, ask me. Just ask me and I'll do my best to answer. All right, guys. Hell yeah. I see Georgia Boys. I see Barney. I see E. Miller. Hell yeah. Thank you guys for being here. It is time for the giveaway. It's time to give away 3 spots in my trading community for free. You guys are going to trade with me for an entire month. I do want to kind of just highlight what perks you guys are going to get here. So with that 1 month of trading with me, you will get my live streams every morning. So every morning, 10 a.m., I hop on there. And what I do is I basically an hour to an hour and a half of me trading SPY on the 5-minute chart. I'm walking you guys through, I see this happening. I see this. Oh, I think I'm going to take a long. I think I'm going to take a short. I'm going to put my stop loss here. Let's see how this goes. And then, oh man, I won that one. Or, oh shit, I lost that one. There's occasionally some yelling if things get real good. There's occasionally some boring days where I don't take a trade at all. You're going to hear a lot about my trading strategy, my volume. You're going to see, oh, that 5-minute chart had a ton of volume. Let's see where it closes. You're going to see the 9 EMA. I'm going to trade with the 9 EMA. So you're just going to get to hang out with me and listen to me trade every morning. You're also going to get my weekly watch list. So every single Sunday, you're going to get all of the stocks that I'm watching for that week. And occasionally you'll get a special watch list. So this week, I didn't have any swings that I was really eyeballing because of the craziness of the market. So I did a special watch list where it was my investment strategy for this sell-off. So you'll get a watch list every Sunday. You also get my trading journals. So, all my trades, all my swing trades, all my investments, I journal them because that's something I believe in as a trader. And that's something that I believe in to become a better trader is you need to journal your trades. So I'm always journaling them, and I'm always making sure that I analyze those journals afterwards. But you guys get to watch them. You guys get to, check out what did he swing trade? What is he investing in? What is he day trading today? Those sorts of things. Last thing, you'll get access to the camp recording. So there are camps in there, and if I do a camp, you guys will get access to every single bit of it. And if I do a camp and the recordings are still up, you guys can go watch those recordings afterwards. All right. Drum roll, please. Drum roll, everybody. I see a lot of people commenting in here. Thank you guys for all the comments. I see, I'm going to butcher this, Eliza Raider, John. I see Origami. I see Osvaldo, Got Wild, Fernando, Daniel. I see Mike Daly. I see Tyrone. Thank you guys for being here. Drum roll, everybody. I see Weirdo. Drum roll. And the 3 winners. The first one is Ken Angelo. I will spell that out. KenKenAngelo. If that is your YouTube username, DM me on Twitter. DM me on X, whatever you call it, because you have won a single free month with me in my trading community. We've got 2 more, guys. We've got 2 more. You ready for the next one? Drum roll. Drum roll. Second winner. Rhett Harrington 999. Spelled RHETT HARRINGTON 999. If that is your YouTube username, head over to my X, head over to my Twitter, and DM me. Last one here. Drum roll. Felicia Harrington. Harrison. Sorry, Harrington was the last one. Felicia Harrison 8481. I'm going to spell that one out. FELICIA HARRISON 8481. If that is your username on YouTube, hit me up on Twitter, hit me up on X. You just got a free month in my trading community. I see some people in there who it looks like they won. Hell yeah, I'm excited to see you guys in the trading community. I'm excited to potentially get to mentor you guys a little bit. It should be fun. It'll be a good time. I think you guys will enjoy it. It's a great place. We are, mostly a learning-based Discord. We are, going to get you in the right place, get you on the right track, and it'll be fun. All right. We got to keep trucking along here. Make sure you guys drop a like while you're here. The goal is 200, so drop that like, and yeah, let's keep going here. So I want to give you guys an opportunity to do some of those the charts, that you guys request. So if you have a chart that you want to see, drop it in the chat right now. Put the ticker. I'll be pulling up dailies. I'll be pulling up weeklies. So drop it in the chat, and I'm going to do a little bit of analysis while I wait for you guys to put out your tickers. What I want to talk about is the SPY daily. We've already talked about the weekly, and that was kind of my main analysis. But I do want us to talk about this daily. And let me get up the graphic I want to talk about. It's going to take me a minute here, so bear with me here. Maybe you guys can use this time to head over and drop your stock ticker that you want me to chart in there for you, but let me grab this real quick. Okay, here we go. You guys have probably seen this. I've posted this probably 20 times. This is the Wyckoff cycle. So we have accumulation, and then we have a markup phase, we have distribution, and then we have a markdown phase. I'm not sure if you guys have heard of this. There's a book about this. There's a bunch of YouTube videos, a bunch of articles online about this. But this is a must know for traders. This is something that every trader needs to know. It's something that I post often because it's so important. And what I want you guys to focus on are the little tiny bits and pieces of the accumulation and the distribution phase. For the most part, I want you guys to notice the selling climax of the accumulation, and then the low volume failed sell-off, and then the retest or the jump the creek of this accumulation area. And same for the distribution. I want you guys to notice the buying climax, the failed rally, and then when we break the ice, and then the low volume rally. Those are the things that lead to our markdown and our markup, which the markup and the markdown are where the money is made and where we get to see the accumulation and the distribution work out. It's essentially the effect after the cause, which is the distribution or the accumulation, which you guys can see right here. It says the cause is the accumulation, the effect is the markup, cause is the distribution, the effect is the markdown. I'm going to make this a little bit smaller here, and then I want you guys to really look at the SPY daily. I want you guys to really look at this area up here when we were above 600. Let me get this a little bit zoomed out here. There we go. There are a ton of similarities between that SPY daily top that we saw and the distribution on this Wyckoff cycle. Let me bring this forward so it doesn't get stuck behind the volume. The first one is going to be the failed rally that we had. The most clear example of distribution is how we failed this rally. So we had this resistance, which you can see on distribution. There's an upper resistance line. We tried to rally, we tried to break out, and we failed. That's the most important part of this chart, in my opinion. The other important area that we have here is the lower side of this distribution. So we had this support here. We broke that, which is what we call the break the ice. When then we low volume rallied up, tested this level. That's what we call that low volume rally here. And now we are in the markdown phase. So what's next? What are we looking for next? We're looking for that selling climax, followed by the spring, followed by the low volume failed sell-off. I'll be posting about this. I'll be giving you guys, tips if I start to see accumulation. I'll be posting it for probably my subscribers on X and I'll be posting it for all of you guys. Most likely, I'll be talking about it in the next stream we do. But accumulation is what happens after the markdown, and we're in the markdown, so now it's time to start looking for that accumulation. All right, I just wanted to talk to you guys about that quickly, and then now it's time for you guys' chart requests. If you haven't put them in the chat, put them in the chat. I'm going to run through these. First one here is Nike. Let's do the daily here. Nike's been nasty lately. This thing has been getting killed. $200 MA should be pretty... Yeah, this thing is trapped below that 200 MA. You guys can see this thing has rejected the 200 MA a couple different times. Was trapped below it in June 2023. It got above it a little bit in November, December of 2023. Trapped in February 2024. Got close to it a couple times, but was trapped. Yeah, you guys can see all those instances. And then we just rejected it in February of 2025. I can see the appeal of this looking oversold. But number one, I wouldn't touch this with a 10-foot pole until we get more clarity on Trump's tariff plans, because Nike's going to get hit like a fucking hammer by the tariff situation. And you can see that based on this market reaction. Nike is going to get absolutely obliterated by the tariff situation. So I would not touch this for upside until we get more clarity on that tariff situation. And also, I don't like how it's trapped below the 200. There is a lot of room between current price and the 200. Current price 53, 276. So we do have a lot of room to move up to, but we also have this previous support turned resistance looming, which again, we do still have quite a bit of room until that area. So there's probably a place somewhere in here, but there's likely going to be more downside too because of the tariffs. There's going to be Trump yapping. He can't shut up about the tariffs. He knows it's bad for the market. He still can't shut up about them. He's going to say something, and Nike's probably going to get hit big time overnight. And if you're in a long, you're just going to get caught with your pants down, and that's never what you want to be. Okay. What's next? Uber. Let's talk Uber for Dan Bob Dan. Uber technology. So Uber was actually on my my main watch for 2025 on my investment watch list. I liked Uber for a potential investment just because I thought that the fundamentals were lining up. Everything was tracking. I liked all of the technology that they were potentially going to be coming out with. And what I'm seeing here is actually a pretty decent buy level down here. We're still not quite there yet, but I think $60 is where I'd be comfortable buying Uber, probably from a swing and a investment perspective both. This thing has acted as strong support since 2024, even the end of 2023. And then this was also resistance in 2021. We can actually drop that all the way over here. Those are actually a little bit higher peaks, but regardless, this support level came from the resistance in 2021. And so for me, the level has stayed key since 2021. I don't see this breaking. I think that that's probably a strong level to buy on, and that is under 60 down to about 55, 56. Price is about 65 right now, so we're about $5 away. Yeah, I'd lean bullish on this for sure. Next one is SoFi. And just to be kind of a little bit long-minded here, I'm incredibly bullish on SoFi in the long term. We'll do some short-term analysis, but in the long term, I'm incredibly bullish on SoFi. I think it's a company that has technology that is future-minded. I like their earnings reports. I like the trends that they're going on from an earnings report perspective and also a valuation tracker perspective. I'm a big fan of SoFi. So, just to get that out of the way. First thing I'm seeing on SoFi here is we do have just a shitload of resistances in this entire area below about $10. Starting at $10 all the way down to like $8. Look at how many we have in this area. Look at how many we have in that area. Let's get volume profile pulled up on this one actually. Yeah, that kind of tracks here. So we're going to have basically a ton of buyer-seller interest as we head into this high-volume area. VPOC is sitting about $7.50. That's $2 down from where we're currently at. But price is also going to get more interest as we get closer to that. You can see how this volume shelf kind of ramps up into that $7.50 area. So we're going to get more interest as we get down near that area. Right now, we're still kind of, we're not too far away from VPOC and the volume shelf, but we still have a little bit of distance. There are all of these peaks that I was talking about. We have just tons of them here. If you're long-term on SoFi, I think you can start adding. I added some on Monday, which was yesterday. When this gapped down to below $9, I was adding SoFi. And so I think you could potentially start to add as we get closer to $9. If you're a little bit more of a short-term trader, I might wait until we get all the way down to this bottom side here, this $8 to $7.50. That would be kind of my swing level that I'd be potentially thinking about swinging off of. But yeah, long-term, you don't want to take the chance that it doesn't go down there. You just dollar cost average in, and I think now is a good time to start. All right. I hope that helped you out, Felicia. Let's do Don wants OFF. I don't know what the heck that is. Oh, is this a crypto? Yeah, I'm not good with crypto, so I'm going to skip that one. We're going to go to Mike's AGL. Holy shit. Okay, Mike, I think you found a little ripper in a bear market here. Look at this thing. This thing is crazy. Where's the 200 at on this? Woo! This looks even better now, Mike. Look at what Mike's doing here. Mike's pulling off the good one. So we rejected the 200 back in February, broke the 200, retested the 200, and then just today we ripped from about, what is that, about $4.25. We opened about $5.30. So I assume this was good news. This is a little bit of a bio company, so we know what kind of news comes with that. The next level on this is going to be that $4.70. See if we can hold this $4.70. That's previous highs. That's high of trend. We've already created a few higher lows. This was our first one, second one, and we're trying to make a third one here. If we can hold above this 470, that's going to give us a lot of space to the upside. Right now, there's this big gap below, but if we can hold 470, that's going to be the area that I would say is key here. Hold that, I would say this is pretty bullish. So as long as we stay above that, Mike, I'm bullish on this. All right, Chats wants Intel. I saw Scratch ask for SoFi, but I just did SoFi, so hopefully that kind of gave you some information on SoFi. I'm going to move on to Chats Intel. Okay, yeah, so I've been bearish on Intel. Let me get VRVP off of here. I've been bearish on Intel for a while now. I was bearish, I think, on my weekly watch list. I can't remember if it was right here after these green candles here when it was, but this thing has been trapped in a range, and their company has just been getting siphoned by AMD. Customers have just been getting stolen by AMD. Market share has just been getting stolen by AMD and other companies. And now this is working on breaking this super key support here. I mean, you guys can see how key this support that we're breaking right now is. We've held this level since August of 2024. We've had 1, 2, 3, 4, 5, almost 6 bounces off of this key level on Intel. In my opinion, I'm just seeing some, like, I guess you call it a cloud over it, downward pressure, whatever you want to call it. I'm just seeing overwhelming bearish sentiment on Intel, and I think it's actually warranted. A lot of times, we'll see things like, Meta back in 2021 or whenever that was, down a ton. We see Tesla, $150 last year. We'll see things like that. And I'll say, I'm calling bullshit on this. I don't think that these prices are warranted. Intel, I think this sell-off, I think this bearish move is warranted. I'm not bullish on Intel. All right, Premier Power Washing is asking for coin. Let me hop up in here, get a little bit of coin analysis. This is going to be 100% dependent on Bitcoin. So make sure that you're doing your Bitcoin analysis as well. But let's do some coin analysis. Okay, so we're actually, yeah, I see what you're seeing here. Let's get the 200 up here. Below the 200. Let's check VRVP. What are we working with here? Ugly cloud, ugly mountain, ugly mound over here. So VRVP is not giving us much. I don't love this support level. It exists. I'll draw it in here. This support level exists for sure. I don't love it because we only have this one real bounce out of it. This one is just a higher low after the first, and this one, I don't know what you're gonna call it. It's not great. So this one bounce isn't really doing it for me to make me, really want to buy this. But it is at a pretty steep discount. That's the one thing you can see here is this thing topped 350. It's sitting 150. Bitcoin is definitely not down that much. Bitcoin topped at 109. It's sitting 75. It's not down over 50% like coin is. So you're sitting at a discount. It's on a support level. I would consider this for a low risk potential swing. I would say you could add this 150s, stop loss below 140 or below like 135, risk 10% on this, and potentially be playing off of a strong support. It's not. I'm kind of struggling with this one. It's not a play that I'm like in love with, but it's also one that if you took, there is a play there. Like that's a play that is 100% warranted and could perform well. It's just not one that I'm like, wow, this looks good, if that makes sense. Oh, I see Bathany in here. What up, man? Shout out Bathany. That dude's a beast. I've been trading with him for, I don't even know how long now. 4 years, something like that. He was, quick little story about Bathany. Me and him met. I was doing one-on-ones a while back, and he signed up for a one-on-one. We talked. I gave him like some screeners and stuff, and me and him have been homies ever since. We met up. We surprised some of our other friends. Me and him used to play video games together all the time. So Bathany's a cool dude. If you guys see him, he's on Twitter at Bathany as well. So check him out there. He's a good dude. He trades options. He's been having a hell of a fucking year trading options. So yeah, shout out Bathany. Good dude. All right, Fernando is asking for MRVL. Let's look that up. MRVL. Oh, man. This thing is down from 127 to $50. I am seeing master support down here in this 30s area right now. Just to be completely honest, let's get a zone in here. Yeah, we've got 4 bounces in this $35 area. And with how much this has declined already, it would be pretty difficult for me to, and also you've got, let's get this drawn in here. You have like this little support level, this little like trend line that it just broke, which maybe it's better suited to be a zone. You have this trend line, this zone trend that you bounced once, twice, 3 times, attempted a 4th, and then you broke lower. I think you're going to see sub 40 on this MRVL, in my opinion here. All right. PLTR. Let's talk about PLTR, one of the big names in the 2025 trading space. This has been kind of one of the names in 2024 and 2025 that kind of shot onto everyone's radar. It was like NVIDIA from 2024, 2023. PLTR has been the name for 2024, 2025. Oh, man. This kind of looks like a clusterfuck now. I honestly don't know if I have a good opinion about this. You guys know I don't like to bullshit you. If I don't have an opinion, if nothing's sticking out to me. Yeah, we're just right on VPOC here. It's kind of a chop zone, I guess. Kind of like a channel, I guess. Like, I don't even know how else to describe it other than just like we're just kind of in this area. I'm not getting bullish or bearish. I'm not getting a clear setup either direction. This is one that I would probably just kind of stick away from. I would probably just not touch this, to be completely honest. All right, Kyle is asking for HPQ. Oh boy, HP. Oh boy. This thing just lost a very key level. Oh my goodness. This thing just lost an absolute banger of a key level. Okay, so this $27 to $24 level, I'm going to show you guys how key this thing was. Back to 2018. Probably even, yeah, let's even go back further. Let's even go back further. This is 2008. 2008. This $24, $25 level was highs. Was the high. 2018. What is our high? $25. We finally get above it in 2021. What is our new low? $25, $26, $24. What did we just lose? The key level from 2008. I can't be long on this. I cannot be long on this whatsoever. It just lost a key level from 2008 and 2010 and 2018. I just cannot be long. Yep, just can't be long. And it's just based on that one reason. If you lose a key level from 2008, if you're stuck below a resistance from 2008, I can't be a long on your company. I just can't. That's just how it goes for me. Okay. I think we got time for maybe one or two more here. Let's do AMD. AMD. Daily chart here. So just, I want to kind of disclaimer as well. I am long-term bullish on AMD. I do have an investment in AMD, and I do think that this thing, cash cow, it fits my good company, it fits growing company, it fits future-minded company, all-time highs in revenue on that last earnings report. So long-term, I am bullish on AMD. Now let's talk in the short term. Okay, first thing that sticks out to me is this key level right here. And then we did have this break right here, which correlates with this key level right here. Okay, so two key levels here on AMD. First one is this kind of 75, 74, 75. It was support in 2020 once, twice, 3 times, 4 times. In 2022, a 5th time. It was resistance in 2022 as well. And so we've had 1, 2, 3, 4, 5, 6 different times that we've respected this 74.20 level. Right now we're sitting 78.20. So only $4 above that level. The next one I have was resistance back in 2020 once, twice, 3 times. And then it acted as support once, twice in 2022. And 2023. Wait, no. Yes. No. Maybe 2023. Like, we're right on the border of 2022 and 2023. So, what is that? 5? 5 times this has been respected as a key level. And that is sitting about $60. So, 2 key resistances right below. Not resistances. 2 key levels sitting right below current price. The downtrend is very strong on this one, though. I will give it that. This thing has moved from about $227 all the way down to $75 a share, $78 a share. So beware of the strong trend. But I do think, again, you have that high reward, low risk swing out of this area. You could potentially play it off of this 75. You could scale in between the two. Stop loss below this 59 level. Those are two key levels that this is likely to at least get a bid from bulls off of. Again, I'm a little biased because I'm long-term invested in AMD, but I do think we do have two technical levels here that could be very, very key for AMD. All right, guys. That is going to be the stream. I just want to give you guys another kind of shout out for being here. I know we switched it from Wednesday to Tuesday, but I appreciate all of you guys for being here. Make sure that you drop a like before you get out of here. Make sure that you guys, drop a comment on this. It helps the algorithm. And remember, guys, do not let your elephant get scared. What we talked about earlier, the market is crazy. Things are going to be a little bit scary. Make sure that you keep your clear head. Make sure that you wait out the emotional moments. And don't make any crazy emotional decisions. If you're a younger person, these discounts are the times that you want to be buying. Because why? We have the fucking chain link fence in the glass. You can get scared, but we have the overarching theme to fall back on that there has never been a bear market that has not recovered. If this is the first one, boom, they trapped us. If zombies start climbing out of walls and aliens land and our stock market crashes and never recovers in the entirety of the world of history, in our lifetime, if it never recovers, okay, you got us. We have bigger problems then. We got fucking bigger problems to deal with. If the stock market never recovers in our lifetime, I don't know if we'll be alive. I don't know. There's going to be a lot bigger things to deal with. So you can kind of fall back on that. There's never been a bear market that has not recovered. Dollar cost average in, cut some costs, have a hedge, use the cash from the hedge if things go lower, and do not make emotional decisions. Do not be an idiot. Sell your whole thing, panic sell, let the elephant jump on a cliff. Don't jump off your elephant. Like we talked, don't jump off the elephant. Be smart. Make smart decisions, clear-headed. Let the elephant make itself tired, and then get back to controlling the elephant. If you guys have any questions, if you need any guidance, hit me up on Twitter, hit me up on X. Yeah, that's all I've got for you guys. I will see you next week. I just want to say again, thank you so fucking much for being here and hanging out with me. It's a great time. I will hopefully see you guys next week if we get our 1,000 views and 200